Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we are now at July 13th, 2020, about 6:40 p.m. Central Time. So, I am not going to be here the rest of the week. I told you I hurt my foot. Well, now they want me to go to the hospital, put me in IV to beat the whatever I did to myself, which was ugly, and they'll get that beaten. So I feel great, but they just want to knock this out and not worry about it. So I won't be here until I'm back. I expect to be back, who knows, probably by Monday with you for these. If I'm back at home, I will put out over the weekend my new products. Now, my newest is I take the daily morning video that I had been doing, and I'll probably do one tomorrow before I take myself and check myself in. But to make a long story short, after that, I've been doing now, starting this weekend, I did a complete new product that I tied into my morning subscriber video, and what it is weekly charts, 40 of them to be specific, with specific buy here, sell there in all the major futures markets. If I get home in time this weekend, I'm even going to start one for the ETF Spider subscription with all the charts I have there with the specifics. Why? A lot of traders want the longer term. Understand, you want the longer term, you're going to take more risk. I'm not going to worry about risk on that. It's not the same way that I trade on the daily charts, but a lot of people want it. The interesting part was when I put out the recommendations, I saw there were some really medium risk trades. I was surprised on these, and this break might be fitting into it. So what happened today that we're in a sea of red right now in the metal markets, and you can see a number of the currencies down a little bit, energy's down. So let's start with the energies. The easiest thing is that Saudi Arabia is starting to make sounds as though the production cuts are going to come to an end in some manner. They said that Iraq is 90% compliant, will be fully compliant by August 1st. That's all of, 2.5 weeks away. That's good news. You had news today from Goldman Sachs and Nuveen and Company, I saw that they think the next move in interest rates is higher. I'm not convinced they're right. I think COVID is so bad that I'm not seeing it. I think they're all getting enamored that there's going to be a cure and a what with all. I'm not buying that. You're still in stage one. We just closed California down again today. Movie theaters, indoor dining. You want to go pray? Not going to happen. They've closed down all the churches, synagogues, whatever, zoos, museums. All shut down at this point until further notice. The two big school systems, San Diego and Los Angeles, shut down. Not even a sign of when they're going to reopen those systems. Everything's going online. Now, if you think that warrants a stock market that goes higher, I get it. Some people do. I'm of the opinion we're not there, and we haven't found any treatment other than they're going into the third and fourth stages, possibly somewhere in the world, getting closer. But those are the stages that they typically fail in, not succeed in. How many times do we read this drug failed, this drug failed? A lot more than you get the breakthrough drug. So I don't want to be a party pooper. I'm a realist, so I just trade accordingly. So you watch what's going on here. Now, as we look at the chart action, we've settled back so far, and we're pulling back here. But we did get a rally that broke that high. So you're no longer in this correction phase unless you suddenly drop back all the way through this number, which would be on a closing basis 30.07. Until you do that, you've said to a degree, that's your trade bottom. Let's see where the trade top is. And so far, it was the close last week right here of 31.78.5. Okay, pretty good action though. Bias is up. As you can see in the chart action, we probed today right into this high. And I had been telling you over and over, that's your trade top, that's your trade bottom, you're caught. Market tried to come out of it, then the California news hit the marketplace. We already knew Florida, Texas, Arizona, terrible, but that didn't do anything. We then take another look at what the chart action is, and when you get this type of action, and I want to take you right here to an outside day down, if you take that out often, I cannot use the word always because it wouldn't be accurate. Often that means the market's going to make a run for the closest moving average above it or a Bollinger Band, the closest of. These are the moving averages. They're all below the market, so that couldn't be it. What's above it? You tell me. Let me take you back right here. You hadn't hit that number. You had only hit it here. And I've been telling you we got sideways action. I don't think I'm off the money at this point yet. So that's what I'm looking at. When I look at momentum, you now have divergence. Momentum's trying to drop down. The bias is up. The trend is up. You're stuck in a pipe. This is called a pipe by me. A pipe means you're trying to break out one way or the other, but you get stuck here. You get false breakout moves. That seems to be what's going on. You don't have that position to look at in the NASDAQ. The NASDAQ would have to take out here 10,505 and a quarter to be in trouble. It hasn't done it at this point. The trend is up, but something big happened. I want to walk you here. This was the close today. You still had the embedded reading, but you're at the low part of the day and you're turning that number down. And now the red number is underneath the 80 level. You're at 75. That is a warning sign that this upside momentum has come out along with price. And if it stays lost, the odds favor price and the 18-day average coming together. That's what the odds favor. So we'll see if that does it. In the Dow, you're in the pipe. You can see it. Again, you tried the upside, boom, you're thrown right back. And that combination of the 200-day and that, pretty lethal in terms of resistance, okay? Are we trending? No, we have a lower low, higher high. Momentum-wise, you're overbought. Any reading when you're not embedded over 70 is overbought. I just look at it that way. What about the Russell? I see the same thing. You're caught in a pipe. I've been saying this pretty consistently. Last week I said, watch out, you've now got it. This is where you were on Friday. Today you roar up to the top of it, and where are you now? You're just getting thrown right back. It's just so typical of a pipe. Knowing when they form, understanding them, well, I tell that to my morning subscribers, and they really get an earful from me. In the VIX, I had thought that if you got down to the lower band, we were going to be fortunate enough to see what? The pros right puts. You're not getting that now. Now the market's gotten itself back into an uptrend. Resistance up here, we are in a pipe. Just remember that. That's what you're in. You're not looking for anything big. What about bonds? Well, I realize what all the pros are saying. I saw the words of today it was Goldman Sachs. Then I saw Bob, I think it's Dole from Nuveen on TV. He's a pretty good analyst, and I saw him saying that they think the next move could be 1% 10-year notes. Well, if you look at the bonds, they're still in an uptrend, which means lower yield. If you look at the 10-year notes, still in an uptrend. You got to take out these lows, but you're in a pipe. A pipe is where new trends come. Now, if COVID gets bad, I have a hard problem agreeing with either of those companies because you're going to see small companies fail all over the place. If the government does anything about this, and I expect that they will, they're not going to let this go unchecked in an election year. They're going to throw more money, if anything, at the market with the Fed and try to keep small businesses, which this new close down in California has got to be a death knell for so many small businesses. How do you keep them alive? What do you do for the people that work? Not only the business, but you got to keep the employees going. What are the payrolls going to do? They're going to swell soon if this keeps going on. So I don't think that this week's necessarily the jobless claims are going to show it all. I think next week will. So I'm still looking for this week to do some of that, but I'm looking at that sideways action. I'm not a fundamental trader, I'm a chartist. And as a chartist, I just see sideways action. In the dollar index, I'm in a bear trend. You hit the lower Bollinger Band, I'd expect bounces off of it, but if I'm right, we're gonna get that gorilla glue and you're gonna break out to the downside. And let's see if that happens. One reason I see people buying the dollar is if COVID is spreading worldwide, but just in the US, I don't know that it's that much of a bullish scenario. In the eurocurrency, you came up, got over the most recent high, got thrown back by day's end, but you're not down very much. You're still holding on. You're too overbought to do anything. You're pretty much sideways action. You have a lower low, higher high pattern. I can't see anything that you'd want there. Japanese yen, sideways, in a pipe. Again, see how the Bollinger Band, the black lines are just going sideways? That is churning action, and I'll be watching that. Out of the churn, you either form a base or a top. You're always watching that. That's very typical. Look at how long this sideways action been going in Bitcoin. Not quite what I'd call a pipe, but closer to one than not close to one. Then we get the differential between Brent and WTI, and it's hanging here over 228, which gives Brent an overall bid against the US dollar. However, you have a higher high, a lower low. I don't see anything to do. And yes, PIPE, you're forming it, and that's a churn that's stepping in there. Same in the WTI, which has a downtrend. If anything, if it can break, maybe you get to 38.35. If you rally, I think you'll have a lot of resistance, 41.57. Gasoline just stuck at the 18-day average, what I call that line in the sand, no trend, in the pipe, very dangerous type of trade right there. Nat gas, not in a pipe. This market's into a support right now. You have higher lows, as you can see, and higher highs. The support's right here at 178.10, the 18-day average. Getting under 170 a problem. Now that's an $800 risk. I use money management as much as I do technical analysis, and anything over $600 is something on a normal trade I typically throw out the window. So that's the way I look at it. I want to remind you what I've been doing. This weekend I started a new product, of course, with me having to go on IV for a little bit to beat an infection. What can you do? And by the way, I feel great. It's in the foot. It's not, I don't have a temperature, none of that happening. But to make a long story short, I'm now doing weekly charts, Saturday or Sunday. I haven't made up my mind what the firm date's going to be. I did the first one, I believe it was Sunday. And I'm getting the response. I didn't think I was getting any response at first. I'm overwhelmed in it. People really like it because for the longer term trader, I'm saying I want you to buy here, sell there. And because it's a weekly chart, it all looks a lot different. Now the risks are different. You have to understand that. You're not trading off a daily chart. But I was surprised at some of the reasonable risks. I do it on the whole slew. There's 40 charts that I do it on. I made it for the moment part of my morning subscriber video, but it's going to be the Sunday evening webinar, and it's on the website. So those of you that are paid subscribers, it's there for you to look at. My goal is, as the weekly chart changes, I'll put those changes during the week, because that's where the subscription is for all of it, on the chart of the week. How do you get it? Go to our website, www.iraepstein.com. Under the word research, you can read about our morning subscriber video. It's all included. I'm Ira. You have a good day. I will see you all probably next Monday. We'll put up some short videos in the meantime, but I've got to get better. You take care.